All right. So let me ask you something. You see a market on Fliq that says, yes, 10 cents, and you think, cool, I'll just buy some, right? Wrong. Like, so wrong it hurts. While you're clicking that buy button like it's a TikTok heart, there are traders who actually know that they're making 200, 300, even 500% returns. And honestly, it's not rocket science. It's just most people are really lazy. So am I. But you're here. So you're already ahead of 95% of traders, right? So what's up, everyone? I'm Surbi. And look, I've been trading on Fliq for about a while now. And before that, I've also traded quite a lot on Poly Market. And I've learned some stuff the hard way, like really hard way. We're talking losing $200 in 10 months because I thought I was smarter than the market. Spoiler alert, I was not. But here's the thing. Fliq isn't like other prediction markets where you just guess and pray. This thing actually has an order book, which is basically like, imagine if the stock market in Vegas had a baby, and most people, they're playing it like a slot machine, right? So in this video, I'm going to show you how to actually read that order book thingy. It's not as scary as it looks. Why clicking buy without looking is basically financial self-harm. It really is. And honestly, some tricks that'll make you feel like you have some superpowers, right? You have superpowers. So, cool. Let's start with the order book thing, right? The layout that nobody explains properly. So, okay. So, this looks confusing, right? But it's actually pretty simple once you get it. Think of it like, when you're at a flea market and people are haggling. That's basically that this is, but with numbers. Above in blue, these are the sellers. So over here, you have 46.40 cents. Like some guy has 1.99 shares. And he's like, nah, I want 46 cents for these, right? And of course, like if you're a seller, you want it as expensive as much as possible, right? Then you have somewhere 21.30 cents. Different person with 8.92 shares going 21 cents, take it or leave it. And it goes down from there. And below in green, these are the buyers. So you have 7 cents, and at 7 cents, you have someone sitting there with 4.02 shares going, I'll pay 7 cents, that's it, right? So this person does not want to budge in how much he or she wants to kind of buy it at. And then you have at 5.50 cents, another person like 50 cents, final offer. That's it. So now see that gap between the two? That's the magic zone, my friend. It's almost 10.40 cents and 7 cents, right? So that gap, that's what you're going to read. That's the market psychology, basically. So this is about 3.50 cents, and lucky for you, it's already written. So you don't actually have to do the mental calculation. So what is it telling us? It's basically the market having an argument with itself. And the market argument would sound something like, like sellers saying, this might actually happen. I want at least 10 cents for it, right? And buyer like, no way. I'll give you 7 cents max. And everybody else is like cricket out sounds. Literally not there. So look at these volumes. They're talking about like checks notes. 25 shares total asking. That's like 2.50 worth of selling pressure. I've seen people spend more on coffee, right? So this is important because, and I learned this the expensive way, when there's barely any volume, prices can go up absolutely bonkers with just a tiny push. So the levels that actually matter. All right. So where are the important spots? Let me break it down. The oh crap levels. So if you see 21.30, this is where 8.92 shares are hanging out. That's the first real wall. Then you have 46.40, where only 1.99 shares, but psychologically it's like people see 46 cents and think, whoa, that's expensive. The maybe I'll buy level support. let's go into that. 7 cents, current best bid, but it's weaker than my Wi-Fi signal, right? 4 cents. This is where what if people live with their 8.92 shares? So here's the thing though, and this took me months to figure. These levels can disappear faster than food at a college party. I'm talking from experience. So basically, like, why market buying is financial suicide? Like, this is what is market buying here. It's, so you see 10.40 and I think, cool, that's my price. But let me show you why that's wrong. Say you want 10 yes shares. First 2.78 shares cost you 10.40 each. Right? That's 29 cents in total. But wait, you need 7.22 more shares because you want a total of 10 shares, right? So the next 4.49 shares are now 12.30 cents each. Another 55 cents. Do you still need more? Yes. And next batch is then at 15.60 cents each. So your 10.40 cents shares actually cost an average of 12.75 cents. And if you're wondering how I calculated it, so if you calculate the 3, don't worry, I did not do the mental math. I actually pre-calculated it before the recording. So that's 23 more percent, like more expensive than what you actually thought, right? So I remember when I first discovered this, I literally stared at my screen for like 5 minutes going, wait, what? It's like ordering a $5 burger and they're like, that'll be $6.15, please. Actually, that does happen. But okay, let's be serious. If you're in Germany, you know the taxes are always included. So if you order like a $5 burger, it will be $5. But imagine if you're not used to that, right? The trap, that's what catches everyone, right? So here are the traps like that got me and probably you too. Trap 1, the look strong trap. That's like 7 cents bid looks solid, right? Wrong. It's 4.02 shares worth 28 cents. I've seen people accidentally move markets with their lunch money in that case, right? Trap 2, the tiny resistance trap. 46.40 cents look like this massive wall, but it's literally 4.69 worth dollars of share, right? And a medium coffee at Starbucks costs more, no matter which part of the world you're in. Facts. And trap 3, the percentage blindness. The 3.40 cents, but it doesn't sound like much. Isn't that true? Until you realize that 34% on a 10-cent asset. That's like, imagine a Bitcoin had a 34% spread. That's chaos. Think about it. So finding the sweet spot, like, that's a strategy time, if you think about it. So where should you actually place order? Well, if you're bullish, let's say you do believe it's going to be yes, then 8.50, split that spread like a pro. Or 6 cents, play it safe, like below the current bids. Or like go like 4.50 where you like go full what if mode, right? However, if you're bearish, then I would go with 35 cents, which means like your reasonable exit if you own shares. Otherwise, 40 cents, you can get greedy, but not too greedy. And 45 cents, that's like full send mode. Like, I am greedy and I love it. However, the key is patience, like much like most of the things in life. And I really know patience boring. Like, I think I'm so not a patient person. But boring does make money. Boring, consistency, all these words which just don't sound so cool, they make money. Facts of life. So basically, see guys, I do get it. The stuff seems complicated at first, but once you get it, it's like having a cheat code. You'll see other people market buying at terrible prices while you're getting fills like at 20, 30, even 50%. But knowing how to read the order book is just step 1. In part 2, I'm going to show you the actual strategies, like how to place limit orders that actually get filled. the thing called iceberg orders. Yes, like the Titanic thing. And honestly, some tricks that feel almost unfair. Fair warning though, once you learn this stuff, you can't unsee it. So you can thank me. You'll watch other traders and be like, no, 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 what are you doing? It's a blessing, curse. So if this has helped you, please do let me know. And I will come back with the second one. And I'm really hoping there's a difference between hoping you make money and you actually make money. That's all I care about. And thank you guys. Love you.